Hey guys, it's Tristan Jones with Moving Around Atlanta. I'm back with another great lender that's going to give you some great advice, some great need to know of how to just get in that dream home that you're looking for. Right now, I have my good friend Gianni. Gianni, I'm sorry, I'm not going to try to say your last name.
The first name's tough enough, man. You get that, you're good.
Yes, sir. So, Gianni, please introduce yourself to the channel and let everybody know who you are.
Sure. Well, first of all, thank you for having me on today. I'm excited to share all the wisdom and knowledge that I have here. So, my name is Gianni Cerretani. I'm a senior loan officer with CMG Home Loans. I've been in the business way too long, 22 years, which is why I have no hair. But no, yep, we share that. So, but I've been ranked in the top 1% of my industry in the last 7 years in a row. I'm an affiliate lender with Homes for Heroes, which we help veterans, firefighters, first responders, educators, and military personnel save money on their home. And I've been proud to say I'm the #1 ranked affiliate in the state and #6 in the country. So definitely have got a lot of experience. We close, my team closes anywhere between 200 to 250 transactions a year. So got a lot of experience, and CMG Home Loans is one of the largest privately held mortgage lenders in the country. I'm local here in Georgia, so we are a direct lender, and we've got all sorts of goodies and tools and programs and stuff that we're going to chat about today, and drop some knowledge bombs on you guys to kind of help navigate through this market. I know there's a lot of noise out there, but we're going to cut through that, and we're going to get down to the good stuff.
All right. Hey, man, I thank you for coming, and I thank you for the gems that you're about to drop for everyone. And you just piqued one of my questions. You took one of my questions for me. What is your outlook on the market right now? Because that's all we hear is a bunch of noise of, oh, the market's going to crash. Oh, it's going to be another 2008. Oh, this is that, another. And I keep telling people, hey, just relax. That's not the case. That's not what's going to happen. Could you
Yeah.
back me up, please?
Well, being that I lived through the 2008 crash, I'll tell you that that's not going to happen. Inevitably, we'll kind of foreshadow, and then we'll talk about what I think is going to happen, what I see happening right now. So the 2008 crash happened for a multitude of different reasons. There was less constraints, obviously, in lending. So a lot of loans that were being made were bad loans. People didn't really qualify for those loans. They were also based on adjustable rate mortgages, and those rates adjusted. So people that didn't really qualify for the mortgage, then they didn't qualify even further down the line. That blew the whole mortgage industry up. So that was problem number one. Problem number two was that values were being overinflated. I hate to say it, but it was true. Appraisers were being manipulated, and values were being overvaluated. So property values were not regulated as well as they are right now. So those two things right there were the biggest, I would say, catalyst that caused the crash. And then obviously the mortgages weren't being rated properly in the bonding market. Whole different animal. If you really want to learn about that, go watch The Big Short, and it'll explain everything about that. But in essence, that's really what caused that issue. What's changed now is that, first of all, we have a licensing system. The mortgage business got very highly regulated. So the quality of loan officers is very differently. We go through a very, very scrutinous process to be a loan officer, financial fitness and things of that nature, and licensing. So basically, the difference between that era and now is that most people are in 30-year fixed interest rates. They're in rates in the 2s and 3s. Even people buying right now in the 6s and 7s, they're fixed interest rates. People know what their payments are going to be outside of some fluctuations in taxes. For the most part, people have an identified budget that they're used to. So will there be defaults? Yes, but they're not going to be at the record they are. The other thing is people have equity. Everybody has equity right now. So the reason why a lot of people had to foreclose or short sales because they had no equity, so they couldn't get out of the home. So you may see more people selling because they have to, financially stressed, but that doesn't mean that we're going to have a wave of foreclosures or a wave of defaults, because it's inevitable that the loans are written better. People are more financially feasibly stronger, and they have equity in their home to walk away with if they need to. So that kind of takes the whole stigma away from another major crash of 2008. I think, I think every market's going to be individually based. You can't look at the real estate market as a whole because every every state has a different dynamic going on, and then you have different pockets in every particular state. Just in Georgia, there are certain areas where I'm seeing people with multiple offers, and then I'm seeing other areas where people are still paying closing costs because they're not getting any bites. So I think overall, we're normalizing. I think we've seen a lot of craziness in the markets, but I think we're normalizing. And once rates, come down a little bit more, I think we're going to see even some more normalizing. I think the Georgia market is going to remain strong, and it's projected to see that we're still going to see a 4% growth in property value, just because the biggest key factor here is inventory. You know this as well as I do. There's not enough homes on the market to even supply the demand that is shortened due to affordability. So people still need to buy homes. It's still cheaper than renting. Rents are still going up, and Georgia is unique because our dynamic, or our state, is politically a desirable place to go. It is also geographically desirable from a lot of different standpoints. We have a very booming economy. A lot of major corporations are moving their business and headquarters here because we've got Hartsfield-Jackson, the largest airport in the country. So we have access to lots of different areas. And you have to mention this weather-wise too. We don't get hurricanes or blizzards, or the occasional tornado rolls through every now and then. But when you look at the weather, we deal with some hot, nasty weather every now and then. But it doesn't. It doesn't.
Wait, tornado. Wait. See, I'm what you guys call a transplant. That's how the moving around Atlanta. I moved from Houston to here. We have hurricanes. I've never been through a tornado.
No, listen, I'm from Boston, so I didn't even know what a tornado was until I moved down here. My wife's from here. All of a sudden, I heard the siren one day, and she's like, "We need to go to the basement." I'm like, "What?"
Oh, wow.
So yeah, occasionally you get a tornado that rolls through every now and then, but it's rare.
I've been
rare.
here since 2015. I've never heard of it, so you guys are good.
Yeah, that's probably a good thing, right? So, but overall, we don't have anything crazy. Nothing that would be a life-threatening thing like Florida that has to deal with crazy hurricanes that could wipe out an entire city. So, it is very desirable to live here, and although property values have definitely appreciated drastically and have increased, when you compare it to other high-cost states like where I'm from, in Boston or New York or California, we're seeing droves. I have clients in droves coming from those states that they're retiring here. They're moving. The ability to work remotely has definitely affected that dynamic. A lot of people that can work remotely can take their job with them, so they don't have the stopping of having to get another job here. They can move with their job and make the same amount of money, which allows them to afford more house out here. And then a lot of people are just selling their home and cashing out and coming down here and buying. So the prices don't scare people from out of state. And that's why, a lot of that is gobbling up our inventory, because they're not replacing our market with a home. If they have a home to sell, they're selling it in their state. So it replaces their inventory, but it doesn't replace our inventory.
Exactly.
So I think, that factor is big. And then the other factor is the millennial generation is the largest generation to come out the gate. And they're all wanting to purchase homes. For a while there, back about 10 years ago, when we first started talking about millennials, everyone was kind of frightened that they weren't going to buy homes because they were the kids of the crash of 2008. So we thought they'd all have PTSD, from being able to purchase a home because they watched what their parents went through, but they didn't. They made very good financial decisions. They're well educated, dual incomes in most cases. They have savings, they have good credit. They learned. So they're very good borrowers and they're savvy and they want to buy. So that's a huge generation. And again, most of them are first-time home buyers, which means, again, they do not have a home to sell. So they are, again, eating up the inventory.
Yeah.
The other issue with inventory issues is that new construction is still not at the speed it was. 5 years ago, you could build a home in 4 to 6 months. That's not a thing now. You know, if a builder could get a home built in 6 to 8 months, they're doing pretty darn good. So, you know, in most cases, it's taken 8 to 9 to 10 months. Some builders are taking longer. There's still supply chain issues. There's still labor issues and things of that nature. And that's your new inventory. And we actually have an inflation report coming out tomorrow. If we start seeing that, we're starting to see the labor markets, even though we had a big jobs numbers last week, the unemployment rate is going up. So it doesn't make sense because sometimes these reports don't always accurately depict the real market. So unemployment is showing signs of a recession. And believe it or not, a recession is good for interest rates. Historically, anytime that we're in a recession, interest rates come down. So between that and lowering inflation, then as long as we can, you know, keep those trends alive, then I would say rates, you know, inevitably should land. And this is coming from people a lot smarter than me, so I'm not making this projection, but I'm sharing with what I know from a lot of different mouths that are speaking about economic trends. But we should land somewhere in the fives. You know, whether that's going to happen, you know, 6 months from now, a year from now, but inevitably when that happens, you know, I think what that will do is that's going to take a lot of people that are not wanting to move right now because they don't want to give up their 3 or 4% interest rate, that they either want to downsize or upgrade, and that's going to create more inventory for the market, but it's also going to create another series of buyers. And then a lot of people that have been sitting on the sidelines because of affordability issues, when those rates go down 2 points, you're talking about $200 to $300 in payment. That could be the difference between someone qualifying for a home or not. So inevitably, I think that we're going to be okay. We may see some seesawing, but I think for the most part, real estate is still going to stay strong, at least in Georgia. I can't speak for every single market, but I mean, right now things are pretty stable. Business has been pretty stable. We had a great month last month. I can only speak for myself, but you know, there'll always be your slow periods, you know, especially when people just get out of school and vacations happen. We're probably ramping up for another big push right before people go back to school. And then it usually slows down right before the holidays. And then, you know, then it starts picking up at the beginning of the year. So inevitably, I think we're normalizing. I think that's really what it comes down to. But, you know, like you said, the media creates a lot of noise, and you know, unfortunately, unless you're in the trenches every day, then you don't really see what the real trends are.
Gianni, what would someone like credit wise have to come to the table with to be able to work with you guys?
So, you know, credit's a great topic. Obviously, it's, you know, it's one of the 4 components that make up an application. Everybody focuses on credit. So, but credit's one of the things that's fixable, right? I can't fix your income. I can't fix your assets, but I can work with credit. So, you know, I always tell people, you know, it doesn't matter where you stand credit wise. It's always good to get a professional opinion on it. I can tell you that, you know, for your government loans, your FHA and VA loans, you know, 580 is a minimum credit score that most lenders work with. So, one thing that I'll mention too, since you're bringing up credit, that's important that I get every day. I get asked every day. So everybody has kind of gotten a lot of education on credit, or so they think, right? Everybody tracks their credit right now for the most part. So I would like to just share something about this, because a lot of people don't realize that when they're looking at their Credit Karma or Credit Sesame, or, you know, your credit card may provide you with a credit score, you may have LifeLock, any of those sites, they all follow what's called a non-risk-based consumer credit model. So that's a different scoring model than we use on the financial side. So a lot of people get upset when they think that there's one way we pull and it's different. And it's because there are risk factors. And what I educate people on is that there's no universal credit score out there. Depending on where you're getting your credit pulled from can warrant a different score. So car lenders have a different risk model than mortgage lenders. Credit card companies have their own risk models for depending on who it is. Capital One's going to be different than American Express. So the best thing I can tell you is with those tracking devices, they're great to use, don't get me wrong, but make sure that the accuracy of your data on your credit report is there. That's the most important thing. And then, respectively, the credit scores are going to be a little bit different just depending on the risk model. But, I would say anybody that's in a 580 tier, even if it's different on your side than it is on my side, is worth taking a look at. And I got plenty of clients that come to me that are not credit ready, but we'll put them into a credit repair plan, and I don't outsource them. I know a lot of lenders will just pass them on to a third-party company. Stay away from those companies. I'm going to tell you that right now. They're a waste of money because they use a very archaic system of credit repair, which is disputing everything negative, which only inflates the credit score, because what a dispute does is it takes the negative information out of the scoring model. But unless that dispute actually warrants them deleting that information, the score is going to go right back to where it was before. So you're paying for a fluff. What we do is a proactive credit repair. So what I'll do is I'll go in there. I have a software where I can go in there and play with your credit report, the different items on your credit report, remove, change balances, remove collections, add trade lines, and things of that nature. So we can give you a proactive game plan to show you what your credit score could actually be. And this is communicating directly with the credit bureaus. So I will tell you, there's no magic wand to credit repair. You have to be active if you want to fix your credit. So just know that there's no magic wand on there. There's no magic button. If someone's selling you magic beans, then it is just that. It's a false reality. But we do give like I said, a proactive credit repair plan to people. And if it's followed, then 9 times out of 10 they come back to us. As long as nothing else changed, then we're able to get them exactly where we need to target them. And we can target a specific credit score, a specific timeline, and all that. And a lot of people, believe it or not, all ages I get, from 20 to 50, people don't have the knowledge of credit education. And I will give them not only a short-term plan, but a long-term plan, because it's important that what makes a credit score work. That's the stuff that we should be taught in high school, but it's not. And there's nothing, and I will be honest with you, I've looked, there is nothing on the web that teaches what I teach.
Cool. The process, how long does the process take to get, I guess, from having my credit pulled to actually getting to the closing table funded and at the closing table?
Great question. So I'll break it down in stages. So obviously the first step is when you fill out your loan application, which takes all of 5 minutes, it takes me all of 20 minutes to review the application. Now, if we have complicated income, that's usually the only thing that requires a little bit more work. But typically we can get all that stuff worked out in 24 hours or less. So once you get your pre-approval, what we do a little bit differently because we're a direct lender. We'll go ahead and start getting all your income documentation, your bank statements, your paycheck stubs, your W-2s, all that fun stuff, and we'll get you right into underwriting. And that helps us while you're out there showing them homes and looking for homes. We're taking some of that timeline out of the process. That way there we can get you fully approved in underwriting without even having a property address, which is really cool because that helps not only eliminate the timeline, but it also allows you to make stronger offers when you're in a competitive market. Because what we do is when we get you approved in underwriting, we replace the pre-approval letter with a commitment letter. And the sellers and the sellers' agents love seeing that because then they don't have to really be too concerned about whether or not the loan's going to go through. Then all we need is an appraisal and the title and the insurance binder, and we're off and running. And it allows you to be less stressed out because now you don't have to worry about the loan. Now you have to worry about is the property. So with that being the case, once we get you fully approved, I've been able to close loans in 10 days, 10 business days. So if you're on point and you're doing everything I ask you to do, you're submitting documentation to me like this, then we can move very, very fast. What generally holds up a lender is the client. I hate to say it, but I'm going to say it. That's the truth. So typically in most case situations, we get held up by a delay of lack of getting the information to us. But I would say on a normal, on a normal regular transaction, 21 days is probably the longest that we spend on a transaction. Now, if it's a specialty loan program or a jumbo loan program, those loans typically take a little bit longer because they're more checks and balances and underwriting. There's second level reviews and things like that. But your traditional products, you should be in and out in 21 days from start to finish.
What if I said, hey, I got $1 million house that I want to buy and I have $500,000 down on it? Is that something that would speed up the process of the jumbo loan?
So you wouldn't be jumbo at that case
Okay.
because
Oh,
jumbo
because you're
loans,
under the million. Gotcha.
yeah, anything over so it's not necessarily the price, it's what you're borrowing.
Gotcha.
So anything over $726,200 is going to be considered a jumbo loan. So
Gotcha.
you could buy a $2 million house, but if you're putting, $1.5 million down, you're still going to be a conforming loan. So,
Gotcha.
Jumbo loans, I would say, on average, you're looking at probably around a 30-day turn time.
Gotcha. Okay. Well, out of all the products that you guys offer, what's your favorite one?
It's a great question. It's a loaded question. I will tell you the ones that I am excited about.
Gotcha.
There are a lot of, everybody knows about FHA,
Uh-huh.
everybody knows about national, everybody knows about VA, everyone knows about USDA. I will tell you, we have a really cool program called Home Funded.
Mhm.
This is a online down payment assistance program similar to a GoFundMe page.
Wow.
It's a way for your buyers to crowdfund their down payment.
Oh, wow. Okay.
Yeah, it's really awesome. And what's cool about it is you get to set up your own social media digital page.
Mm-hmm.
And, depending on how much you're wanting to raise, you can set a campaign goal. So let's say I'm raising $20,000, then I would set my campaign goal. I get to set up a profile with my picture, very similar to a Facebook page. My picture, I tell my story so that I can get people excited about what I'm doing. I'm buying my first time, my first home ever, blah, 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 blah. Johnny needs a backyard. My dog needs to run, yada, yada, yada. You pull at the heartstrings. And then you start sending that information out to the web. You can send it to your family. You can send it to your relatives. You can send it to your friends, your coworkers. The cool thing about it is anybody can donate. In a normal gifting on loans, only family members can donate. And there's a lot of paperwork involved. They have to involve their bank statements and stuff like that. And a lot of people are like, whoa,
Yeah,
I don't want you to know my business,
exactly.
right? This takes all that off the table. And not only that, but for every dollar that they get donated to them, at CMG, we match them $2 up to $2,000.
Oh, wow. Okay, cool.
So they and they do have to be a first-time home buyer to get the grant. You do not have to be a first-time home buyer to use this program, but to get the grant, but that's a free $2,000 that you will get just for getting donations. And there are other ways that you can get the grant as well. By sharing the page, you can get donations and grant matches. And then we also have, this is really cool, we've partnered with over 1,000 major retailers like Walmart, Home Depot, and you do your shopping through the portal and you can actually get cash rewards back that go towards your fund as well.
Oh, wow.
And you can actually share these links with your friends and family, and if they do the shopping through that, then that'll go towards your fund as well.
Oh, that's cool. That's awesome. Okay, because
Yep.
Nowadays, you walk in Walmart, you spend $1,000 in 10 minutes.
Right. Well, what's the biggest objection with most people? It's their down payment and their funds to close, right? So this is a vehicle that we tangibly give people that they can actually, set up a real goal. Everyone loves social media too, and it's great every time they get a donation. If we had a page together, you'd get notified, I get notified, they get notified, you get excited. So, if I tell a client, they've got to save 10 grand to buy a home, they're going to walk off the phone feeling pretty deflated. But if I say, hey, let me set you up a page and a goal. Then it's tangible. It's in their face. It's there every day. They're sharing it with their friends, their family members, people talking about it. You can talk about it at parties. If you have a birthday party, instead of getting gifts that you're going to throw away or put in a closet,
Give me some money.
you can have them send gifts
Yeah.
of money.
Yeah. Got it.
It's great for weddings.
Yeah.
We have people that will actually put, we'll create a QR code and they'll actually put it on their wedding invitation instead of doing a registry and getting china and vacuums that they're never going to use. They're going to use this. And typically, their guests will donate more money than they would spend on a gift because they want to be part of that home buying process,
Yes,
which
sir.
is really
That's a better
cool.
gift anyway.
That was the first one. So the second one, this is really powerful because everyone is very rate sensitive right now, right? Everyone is super rate sensitive. So we've kind of eliminated that rate fear. A lot of people will tell me, I'm going to wait for rates to come down, right, to buy. Well, the problem with that is we just talked about prices are going up. So you may wait for rates to come down, but we don't know when that's going to happen.
Yeah.
So you could be spending another $50,000 on the same house, and great, the rate's lower, but you're still paying the same amount of money because you just spent an extra 50 grand on the house.
Yeah.
So we wanted to give our clients the ability to not have to worry about that. So we created a program called Rate Rebound. So any of our buyers that purchase a home and close by March of next year, we're giving them the ability to come back to us after they've made 6 mortgage payments. Within 5 years, they can come back and do a free refinance with us. So we don't charge them any lender fees, and we give them $1,000 credit towards the third-party costs, which are your title fees, your attorney's fees, and in most cases, that pays for everything. And because we service our own loans, if we're escrowing the taxes and insurance, we just transfer the account. Normally, on a refinance, you have to start the escrow account over, and it costs a lot of money. So it's really an inexpensive way to refinance. And here's the kicker. We're going to give you an interest rate that's way below the market. It's not going to be an attainable interest rate with any other lender. And you're probably asking yourself, how are we doing this, right? Because we're not making any money on these, but because we service our loans, which means that's where you're going to make your payments to, the servicing side of our business, a lot of people don't know that end of the business. They don't really start creating any profit on that until it's about three years old, servicing a loan 2 to 3 years old. So we all know that the rates are going to come down inevitably. And our objective is to keep our clients in our servicing platform. So it's better for us to offer a deal to keep them in-house, even if we're losing money on it, to make the client stay with us versus them getting nabbed up by another lender. So that's the truth of the matter is, but the best part is you get to benefit as a client, and you don't have to worry about spending an astronomical amount of money on discount points to buy down the interest rate. All these different things. If you're okay and you can swallow the payment, inevitably rates are going to come down. I can tell you they're going to come down in 5 years. I can't tell you when, but you got 5 years to come back and do this. So it's really a great opportunity, and you're going to get a rate that no one else can get. So it's a great way to just take that fear off the table.
Oh, that's awesome. That's awesome too. Okay.
Yep.
What else do you have
And
for us? Give us everything. We want it all.
Yeah. So that's for your buyers, right? So I got to give you something for the sellers.
Yes.
So we have a really cool program called List and Lock.
Okay.
So if this is great for a seller that may be having some challenges moving their property, they can actually come to us and lock an interest rate for that property that they're selling up to 60 days. So it costs the seller $999, which is refundable as long as their buyer uses us as the lender. If not, then it would just be a $999 fee. And they can lock an interest rate up to 60 days. And they can then advertise that interest rate with the home. And what's really cool about it is they can use money that they normally would give away as concessions to buy down the interest rate and offer a rate that isn't attainable on the market.
So would the buyer wouldn't have to qualify for that rate or something like that? How does that work?
Of course, yeah.
Okay.
Great question.
Okay.
So obviously, it's going to vary depending on program and the buyer's credentials. But the cool thing about it is the way that we have it marketed. So what it does is it locks in the interest rate and the pricing for that day. So whatever program they end up picking, whether it's FHA, conventional, or VA, they will have that pricing available to them, and then the person that qualifies will fall into that pricing bracket. But what's cool is we advertise it based on, obviously, better credit scores, so that they can get people attracted to the market. And then the way that the advertising is, it actually breaks down each program, each credit score tier, so you get an interest rate for each of those tiers. So you can advertise, it's not just one interest rate, you get an actual spreadsheet of what each interest rate would be for each different credit tier. But I can tell you, I've looked at a lot of different cases. The rates are way better than you can get on the market, even if you're not buying it down. So that's something that, we are helping sellers. And obviously our objective is to get the seller's next transaction and or the buyer in the door. So, we don't make a ton of money on this, but this is helping sellers move the property. And, advertising an interest rate that's below market right now could be very appealing to a buyer, and it could be the difference between whether or not they decide to make that decision on making an offer on that home. So it's very powerful. It's great marketing for you as a realtor, because it's all turnkey. And you can literally access it within minutes. You pay the fee and you get all the market material. It's turnkey, and you can shoot it out to your social media and anybody in your database.
So with this, my mind is already racing. Would this help someone say that had an expired listing, couldn't get the home sold, possibly price too high or anything like that? Would that would help me make that sell a little bit more attractive, correct?
Absolutely. Yep. Absolutely.
Awesome.
Yeah. It's definitely for people that want to move their property, that may have had issues, for whatever reason, if they're just not getting the traffic because of affordability, or whatever it may be, that's a way to really kind of grab more traffic to the home, and possibly pick up somebody just by advertising a lower interest rate, because everyone's hyper focused on that. Affordability is our biggest challenge these days.
Okay, of course. That is a great one. That is an awesome one. Okay, yeah. So, man, that sounds so awesome, man. I appreciate it. Not gonna hold you up too much, man. I know you sound like you're a busy guy, man, and in this market, everybody is busy. But I do want to sincerely thank you for coming on today, moving around Atlanta. Tell the people how they can find you, man.
So the best way to find me is directly at 404-213-9663. You can also visit my website, which is www.giannicerretani.com, GIanniCerretani. I know it's a lot of vowels, but that's the best way to get me. Or you can just Google my name. You can find me there too. If you Google Gianni Cerretani, you'll find me. I'm all over the place. So, but call me, text me, wherever. That cell phone is on all the time. I even had it when I was in the hospital. I answer the phone. That's my credo. If I'm breathing, I'm living, I'm answering the phone.
My guy while he's in the hospital. You let him get out and get rested and get well first. Then we'll handle the business. All right, Gianni, man, I appreciate you so much, man. Thank you for accepting the call and jumping on with us today.
Hey, thanks for having me, and I'm looking forward to future times. And thank you for everyone that listened. And if you have any questions or would like to talk to me about anything, please give me a call.
Yes, please leave any questions you may have for Gianni in the comments. I always look at the comments. I'll shoot them right over to him. And the next time we are on, we will read your comments. Your question.
Awesome.
I'm sorry. All right. Have a good one, man.
See ya.
Hey, thanks for watching. Don't forget to like, share, and subscribe. Also, comment down below and let me know what kind of home you would like to see previewed next.